Hey guys, welcome back to the channel. Today I have the pleasure of bringing you James Seckman. He is our accountant, and that's an important distinction. He's not your accountant. He will provide some very valuable information, but you'll need to speak with your accountant if you want specific advice about how to do things in your business. But hopefully what he'll do is he'll get you thinking about ways that you can improve your relationship with your accountant and maybe some things that you need to improve on it throughout your business. Get better performance out of your business. But before we get into that, if you like the content we're bringing you, please consider liking and subscribing. Drop us a comment down below and tell us what we're doing right. If you have some more questions for a future episode of this and you'd like to get those answered, put your questions in the comments down below. And without further ado, let's get into this.
I'd just like to introduce myself. I'm James Seckman. I've been a CPA since '92, been in public practice all of that time, and one of our primary focuses in our accounting and auditing practice is construction contractors.
Is that important?
Yes.
Are there different types of accountants?
It's very important because a regular tax preparer typically isn't qualified to do financial statements. So they're good at what they do. You know, they understand cash in, cash out basis of tax preparation. And most of them understand the accrual basis of tax preparation, but they don't understand generally accepted accounting principles, which is a requirement of GAAP basis financial statements. So it's very important for a construction contractor to find an accountant that actually has those experiences, that is qualified in it. We see a lot of times a construction contractor will go with an accountant that only is seasoned and experienced in taxes. And again, that's not where the growth of your business is going to be found. You need an accountant, a CPA that has experience with construction contractor financial statement preparation.
All right, so the first question I have is, what are the biggest causes of construction company failures? And one of the things you should know is James is well versed in this because he was our accountant when we failed the first time. So he walked us through all that, and I couldn't have asked for somebody better to kind of lead us through that mess.
One of the things that we see on most failures, and almost all failures of construction contractors, is that they are undercapitalized. They didn't bring enough resources into their business to start it. And you know, just a ballpark, what I would say is at a minimum, the owners of the business need to bring in about $100,000 of personal monies into it to capitalize the business. If you don't have that, you're on a shoestring, and then you're borrowing too much money, which is another problem. That, you know, the borrowing of money also is a problem, and the growth, like unsustained growth, uncontrolled growth, is a third cause of business failures. Because what we see in uncontrolled growth, which basically is a trend line with most construction contractors, once you start your business, the business is there. And if you grow too fast and outpace the amount that you have put in the business, the capitalization of the business, your own monies, you have to borrow money. And that's where everybody gets in trouble, because as you grow, you add more overhead to your business. And that overhead ends up being a killer, because you have to go to the banks and borrow more money. Then you're in a leverage position. And I would say, you know, finally, you know, another thing that we typically see as far as, you know, the business failures is not being able to have the right project managers, the people overseeing jobs and job costs. So job costs will run out of control, and the jobs will get out of control if someone isn't properly overseeing those jobs. So I would say, you know, those are the four items that we see most typical in business failures, undercapitalization being the most important one.
So the contractor that's kind of talking about that a little bit more, the contractor that's going to start on pull themselves up by the bootstraps. You hear that a lot, and everybody really encourages that, but that's a tough position to be in.
It's very tough.
And
you just working hard in itself doesn't get you where you need to be, because you have to have some resources. So we recommend or encourage to anybody starting up in construction contracting to save money. You know what I mean? While you're working for someone else, accumulate, save your resources until you're able to basically capitalize that business properly, or you will pay for it. Just like you guys did, it took years to work yourselves out of being undercapitalized.
Twice.
And then once you're capitalized, then the business model works perfectly. And as long as you're keeping track of the jobs and job costs, it's a pretty specific formula with construction contractors, and it's basically uniformed. It doesn't matter if you're doing fencing, if you're doing highway construction. It doesn't matter what type of construction you do. The model is always pretty consistent.
So talking about outpacing your capital, so success can actually be a killer. Too much success
Absolutely
can be detrimental as
Absolutely. You have to have controlled growth. I'll give you a perfect example of a business failure that we saw. This has been 10 years ago or so. We had a construction contractor. It was an electrical contractor. He was relatively a startup. And what he ended up doing, and they were bonded jobs, of course, and he bid on 2 very large electrical contracting jobs and ended up getting both of them. He didn't have the resources and he didn't have the banks behind him to basically fund the retention. And because of that, he went broke. He had 2 should have been very profitable jobs, but he went broke because he didn't have a bank behind him to fund the retention and he didn't have the resources personally. So he literally lost it. He should have been, he would have been set to make hundreds of thousands of dollars that year, but he went broke because he could not fund that retention. He didn't have the bank set up to work with him, and he didn't have the resources. Just poor planning is what it boiled down to.
That was here in town.
Yes.
Okay, so one of the things we learned is there's a big difference between what banks want to see and what the IRS wants to see, right? So we create our tax return, and the banks like our tax return, but it's almost like there's 2 sets of, it's almost competing. And so can you explain that to some of our viewers, how tax returns and what the bank want to see can be competing against each other at times?
What I'll do is I'll try to explain to you, there's a myth out there that the banks only use tax returns, and that's absolutely not true, because the banks that we work with, they like GAAP basis financial statements, which are basically accrual or percentage of completion basis. They like it because it matches revenues and expenses better. So the revenues, when you have revenues, you have expenses associated with them. On a tax return, a lot of our construction contractors are on the cash basis. So there are things that are done that don't match necessarily. So there's a non-matching of revenues and expenses. So the banks always weigh more towards the financial statements than they do the tax returns.
So if I'm new to construction, James, and I need to choose an accountant, what are some key things that you think I should be looking for? How am I going to choose a good construction accountant for my business?
It's very important that you find an accountant that has experience with construction contracting, not just the tax preparation, but also the financial statement preparation. Because even though, you may not have bonding requirements initially, you may grow your business to that point. And it's good to have a good base so that accountant can coach you up, because you need someone that basically understands, GAAP basis or accrual or percentage of completion financial statements. That's critical in this whole thing. You also need an accountant who has a good understanding of banking requirements and bonding requirements. That's very critical, because just a regular tax preparer has no clue about those, and so you end up on an island and you eventually outgrow that. So you might as well start with the right person already. And the other thing that I would say is you need an accountant that understands job costing. You need an accountant that understands pricing, gross profit margins. Those are critical, and then all the key ratios, so like working capital, your current ratios, your debt ratios. You need an accountant that understands each one of those, so that, because there's a specific formula for construction contractors. As long as you're in those parameters, you're in good shape. Once you get outside those parameters, there's corrections that need to be made, and you need someone that can help counsel you in that way. As an accountant, we're just part of your business team. We're just part of your construction contractor team.
So I'll add a couple things in there from my own personal experience. We had a bad accountant. And it's not that they had a poor understanding of construction. It's just that there was a personality mix. We didn't jive well. Rather than teach us anything, they just kind of looked at us like we had a third eye in the middle of our forehead and thought we were stupid, you know? And so that wasn't really a good, like you said, we're a part of a team, you're part of our team. And so having that ability to talk to you, and there needs to be some, I have to like my accountant. I have to like and be able to be open with my accountant. So make sure that you find somebody that I think has the personality you're looking for. That can be tough in an accountant. Not all accountants have personality. James here has personality though, so we're pretty lucky. The other thing is that I think I'm surprised at how many people don't understand retainage, and that's a huge item on our balance sheet. And people, like, I went to a bank once, and I don't think they understood what retainage is. They didn't understand that $150,000 was like cash sitting in a savings account somewhere. It's coming, So.
It is surprising how many banks, will discount that asset, like it may not be collectible. Because some receivables, like in retail, you may not collect them. So you set up allowances for those. But as a construction contractor, if you perform, as long as you have no performance issues, you're guaranteed to receive those receivables and retentions. They are like cash in the bank. But a lot of times bankers who aren't familiar, and that's another thing I would say, is you have to look for a bank that is familiar with construction contractors also.
It's all part of that team, an attorney, an accountant, a banker. And with those people, if you get a good team of those people, I think that sets you up for success. We have our bank down here that we finally established a relationship with, and he's in our corner looking for our success just as much as we are.
Absolutely.
So, if you had your five best pieces of advice for a contractor, what would those be?
The first one we've already mentioned is capitalization. Make sure you're bringing enough money to the table to adequately start your business, to adequately fund your business without taking on too much additional debt. The second thing is conditioning yourself to where you build up large cash reserves. Cash is always king. Cash reserves are important for construction contractors. The next one would be working capital. So that's current assets minus current liabilities. That's basically your working capital, the resources available to fund the working capital of your businesses. Owner participation. Owners have to take an active role in managing their construction business. It's absolutely critical. You can't just rely on, I've had a lot of contractors that hired project managers without overseeing those project managers. And then, a lot of times the projects, by the time they realize they've gone south, it's too late. And so the owners really have to be actively involved in the business. And the final one is hiring. It's very, very important that your key employees, you do a good job of hiring them. You screen them. You do a good job, make sure they meet the qualifications you need, and make sure you're overseeing them until you have confidence in those key employees.
So you mentioned working capital as tip number 3. I think that's one of the places that a lot of people go south to. Maybe you're going to disagree, but I see a lot of people stripping all of the equity out of their company so that there's nothing left there. Do you see that? Do you see that happen quite frequently, especially with young contractors?
Absolutely, because what ends up happening is they think, those revenue trends will continue forever, that there will be no down. But as we know in Wyoming, there's cycles. You have to understand your business cycle. There's ups and downs, and you have to have enough cash or working capital to see yourself through those low points. And so, like everybody, everybody wants to make a good living and be able to take money out of the business so that their personal lifestyles can be significant. But I think it's very important for the success of the business and for your personal success. You leave those funds in the business. You try to live as lean as possible personally and try to build that business up. And then that business will take care of you the rest of your life.
And I want to say for the record, we can do better. We're not perfect by any means, but we're always striving to be better.